Oh, okay. Welcome everyone. Welcome to Bamboo Wealth Financial Planning Does Matter. Today we have a special guest once again, Dario Bartolomeo from AMP. Thanks very much, Dario, for being with us today. How are you?
Yeah, thanks for having me, Sam. Yeah, no, going really well.
Today we're going to talk about a very important topic, which is redundancy payments, which is fairly thematic in the current environment with the pandemic that has occurred. Thousands and millions of people worldwide have actually lost their jobs with the shutdowns. It's estimated the current unemployment rate in Australia is about 5.2% in March. So I'm going to be asking Dario a few questions, just again, in relation to the information we provide today. It is general by nature. It is general advice for education purposes. It's very important. I want to emphasize that you do see a financial planner because they'll be able to provide you a specific tailored strategies and advice for your particular circumstance. So Dario, I just wanted to run through the basic information about redundancies for our audience. And just generally, what is the redundancy is such a funny term. What is a redundancy in relation to losing your job?
Yeah, thanks, Sam. Look, it can be it's a very interesting kind of time that we live in. And as you were sort of saying, there are lots of people being made redundant or effectively losing the job. And this is where clients or the employer effectively comes to the conclusion that role is no longer available. And hence why it's called a genuine redundancy. It doesn't necessarily reflect the overall performance of the employee, doesn't necessarily reflect them sort of putting their hand up, sort of saying, I want to leave. It's effectively the role's no longer there, and it's therefore that role, as the name suggests, becomes redundant. And when that happens, there's a couple of different areas where different areas of payment that's entitled that the actual employer is entitled to. And that includes things such as their unused annual leave and their long service leave payments, some what we call employer termination payments, but also a genuine redundancy or an early retirement scheme payment, which gives them some tax effective payments, given that role is now gone or that they have been made redundant. But there's this common misconception that the whole lot is going to be tax-free or that the whole lot is taxed. But there are some limits in terms of that taxation piece as well.
Okay, so tax planning is very important in relation to making sure people have more money for retirement. So what are some things they need to consider in terms of taxation for when you receive redundancy payments? What are those rates?
So probably two or threefold. Effectively, if the termination is due to a genuine redundancy, there's a specific formula that changes year to year that the client needs to understand and needs to adhere to. And effectively what that means is, from a tax-free perspective, they're entitled to about $10,630 odd tax-free, plus an additional $5,300 for each completed year of service, right?
Yep.
That is effectively tax-free. The remainder is treated, or anything in excess of that, is treated in what we call an employment termination payment, right? And that's taxed in a different type of way. It's still very tax effective, but not tax-free.
Okay. So with a redundancy, it's much bigger of a shock. In terms of cash flow, what could you talk about in terms of cash flow for people receiving redundancy payment?
Yeah, look, it's a case by case basis, Sam. And I think, again, going back to what you were saying at the start, it's a real reason to seek advice at that stage. And why I say it's a case by case basis is every individual is different, right? So for some people, cash flow is not an issue because they might be made redundant. They've had a number of years service. They get a lump sum of money and they find a job straight away. So they're able to utilize those funds in a different type of manner. For others, they may not become such a shock in terms of they weren't expecting to be made redundant. As you said, they hadn't planned for redundancy. No one knows when the redundancy might occur. I think this crisis that we've seen in the last 3 or 4 months have brought that home, in that you can have all the best plans in the world, but if something comes out of nowhere, how do you kind of take the next steps? So some of the things I see clients do, for example, is they might put some of that money in an offset account to offset against some debt, for example. Some may pay some debt, so going forward, their repayments are going to be lower.
Sure.
Others who may be fortunate enough to get a job elsewhere, in a quite a fast type of time frame, may use it to look at some longer term investments, or maybe invest in things like superannuation. But it is really a case by case basis, Sam. But there's some of the things I certainly see people do. I think the cash flow part is really important. Have a chat to someone about, or an advisor about, where that sits from a cash flow perspective.
There are other consequences. I mentioned people taking redundancy payments have inadvertent consequences, and one of them is insurance. In terms of protecting your family, what comments can you add in relation to looking at your insurance policies with receiving redundancy payment?
Yeah, look, I think it's probably one of the key reasons you need to seek advice. Unfortunately, some people, if they are made redundant, they then kind of start to look at areas where they can sort of cut payments and so on and so forth. Insurance, unfortunately, tends to be one of those. And the reality is that's probably the time that you need it most of all. Does that make sense? So really important to review where your insurances are at, have a chat with an advisor, and also see what some of the entitlements are within that policy. Some policies, for example, although income protection, for example, doesn't cover you for redundancies, it may give you the opportunity some policies have the opportunity to stop the premium for 3 months, or they may cover some mortgage payments to the minimum for a period of time as well. So really good opportunity to make sure that you know what you have as well.
Okay. What are some things that people should also be considering for Centrelink entitlements, whether it's approaching age pension, or be it so far away from age pension, say you're 20 or 30 or 40-year-old, which is not unusual receiving redundancy in their current environment?
Yeah, look, it's a good point, Sam. Look, a lot of people sort of say, well, look, if I lose my job, I'll get made redundant, I'll just line up at Centrelink and I'll get the job seeker payment or whatever, the new start, whatever they kind of call it as well. But it's really important to understand that there are some waiting periods that they need to think about, and that looks very different in the current environment. There's some exceptions, but effectively there's normally an ordinary 1 week waiting period. That's also followed by a liquid assets waiting period, which can be upwards of 13 weeks. So that liquid asset waiting period, if I take that in isolation, it can be between 1 and 13 weeks, and it applies if your liquid assets, so money that you have at the bank, 9 times out of 10, that would be part of what you have from a redundancy perspective. If it's more than $5,500 for a single person with no dependent, or $11,000 for someone who's partnered, they may need to wait a period of up to 13 weeks before they're entitled to a job seeker allowance, a sickness allowance, youth allowance, and Austudy. Now, in the current environment, some of those measures have been waived, but that's only going to be for the short term.
And overall, what would be the general advice or suggestions, guidance you to give clients in the current environment receiving redundancy?
Yeah, I think it's really important to be informed, speak to a financial advisor, make sure that you understand that the breakup of the components of your redundancy, understand the tax consequences, understand the Centrelink consequences, and probably more importantly, understand where that money will run out very quickly. So make sure that you have a strategy in place to make sure it's going to help you with your overall needs and objectives.
Thank you once again, Dario. And for our viewers, thank you very much for being with us today. Please press the like button if you enjoyed this segment, and we hope to see you again next time. Thank you. Thanks, Dario. Thank you.
Thanks, Sam.
Bye-bye.
Thank you. Bye.